Hey guys, Dennis Wilburn, the Active Trend Trader. Welcome to today's session. I'm excited. I've got two trading tips that I'm going to share with you today that will help you enter your stock and ETF orders at the right price to make sure you're not overpaying for your entries. In other words, let's buy at wholesale and sell at retail. But first, up in that corner, there'll be a drop down that talks about the AutoPilot Trading Service. We're beating the S&P by double digits this far in 2022, and I'd love to share with you what we're doing, and you can take a test flight for 3 months to see if it fits you. But let's get to today's session. You're going to love these tips. You'll love the stocks we're looking at more. Let's go. Okay, good afternoon, everybody. This is Dennis Wilburn, the Active Trend Trader, joined today by Anil Parikh and Steve Ferrara from two IBD facilitators for IBD groups. I'm really glad you guys are with us today. And we were just chatting a little bit about how exciting this market is. Good morning, Anil and Steve.
Good morning.
Good, great to be here.
Yeah, love it here.
So, believe it or not, we have unearthed a few stocks that we'll be taking a look at here shortly. But we're going to jump right into today's session. I want to welcome everybody. Thank you so much for joining. As I mentioned in the opening, that I will be covering a tip that will help you time your entries a little bit better in both a up and a down market. So remember, start your weekly review with Trade Your Way to Wealth and Financial Freedom. And we'll be taking a look at the market index review, marketing. And right now the market is not in correction, but it's market uptrend under pressure, I know when the market goes, and this is the IBD rating, when that happens, I switch to a half position size. I'd never invest more than a half position when the market goes into that. We'll be taking a look at some stock picks. And of course, as I said, I've got a trading tip, but you have to stay around to the end to be able to see that trading tip. If you want to identify or basically join me on YouTube, here is a QR code. Just put your camera or your phone up, take us, and your camera will automatically convert that over to the website, and then it'll link you over to the Market Tech Talk YouTube channel. So I would just a simple ask from me, and invite your friends that are interested in trading stocks. We provide very valuable information. Steve and Anil, between the two of them, I think they have 150 years worth of market background, right, guys?
Just says we're old.
No, it's not quite 150. Well, between the three of us, I know we're probably pushing 100 years worth of market experience that we want to share.
So. Yeah, huh? Probably so. Probably.
I know
so.
I've got 30 years.
I've got plus that, yeah.
And Anil?
No, I guess about 30.
Yeah. So anyway,
there we go.
Yeah.
So what we enjoy doing is we enjoy sharing what we know and what we have discovered, because if we can help people to avoid the landmines of trading, so much the better. So I like what Leonardo da Vinci says: simplicity is the ultimate sophistication. A lot of times people stick their nose up at simple trading systems, but each of the three of us follow a simple trading system. And right now, our simple trading systems are, and as you can see here, the market is almost in bear territory. I'm very pleased with active trend trading. We are pushing up a little bit past 5% for the year so far. This was where we were last week, and here's where we are today. Running about 14, almost 15% above the S&P. And as you can see, the S&P, everything is in the red, except for active trend trading is not in the red. So I'm very pleased with that. I shared with everybody, at the beginning, or I was going to tell them, I was going to share with them, here's where we're sitting. I am only 28% invested, but I've been very selective utilizing the AutoPilot Trading Service to jump into trades at the right time. As you can see, I'm in tech. I'm up 19% on that. We did the inverse ETFs. We ran up, took some profit off of that one. That's the other thing that is helping us be very successful this year is we know when to take profits. BPOP, again, up a little bit. And then CMC also up about 10%. We've taken profit off the table on 3 out of 4 of those positions. And so we're just, basically the SQQQ, great trade. That's the inverse ETF of the NASDAQ. And as you can see, while the NASDAQ's going down, SQQQ is going up. So let's go ahead and jump into today's trades. And everybody said that they really liked the concept of us jumping immediately into some particular stock setting up. So Anil, I'm going to turn to you, my friend, and after you, I will come back and do a market review. But you came in with ANT. So tell us about it.
Again, the stock passed by one of my most critical screenings thing, but price-wise, it's going the wrong way, and therefore I said, we'll buy only if it crosses at yesterday's high.
Okay.
And
now I have a question for you. Let's say this weekend, this particular stock is making a new low, okay, or a lower low on the daily basis.
Right.
Would you think about buying above the high of the low day, which in this case would be today's high?
Right. I'll check the fundamentals on it again today and see if still holding up on my screens.
Okay.
But I'd like to buy it above the 50-day line also.
Okay. And I'm showing it's hanging right. 50 and the 20 are almost lined up with each other. Yeah. I like this pick, Anil. One thing, the weekly momentum is starting to shift. Last time the weekly momentum shifted on this, it took off like a bat. And so it had recently had a 4-for-1 stock split. And I think it also has weekly options and it does have weekly options, which give you a lot more opportunities for I think the options provide options to be able to, work within the interest. So I really like that. That's what do you think about that one, Steve?
I like it. I was in it on the 31st.
Okay.
I got out and got right back in on the pull back to the trend line, and then I got out today.
Okay. And so, yeah, that's working pretty good. Again, it's trying to reclaim the 50. So that's one of the things I like on today's chart. It looks really good. Here's one of the tips I just want to share with you guys really quick. Pay attention to what the VIX is doing. VIX is the volatility index for the S&P. And just take a real quick look at it as we're trying to push back up into a higher level. Every time it has gotten up into about the, let's say, 35 level, we've wound up with a reversal down to the downside of it. Well, that corresponds with the last time it did this was on the 24th of, that's the week of the 24th, or that was the 24th, that actually was the 24th of January. Go back this weekend, look at this, compare it to the S&P to see if that corresponded or came in close to being a low where it would have provided a potential trade to the upside. We want to be paying attention to the clues that the VIX is giving us. And when it gets up into these overextended areas, it doesn't stay there long and oftentimes which leads to something that Steve was talking about, is that he's waiting for a strong reversal, and he's leaning more towards, hey, we should get a bump here shortly. Correct, Steve?
Correct. can't predict it when it will be, but in the next few days, I think we'll have a bump.
Okay. And if you want to also look at the VXN, similar type information, but this is the volatility index for the NASDAQ. Very important, important aspects to be aware of. And look for the extremes. Look for the extremes. And it's not a darn thing wrong with, like on this one. Hey, I can put an alert on this at, let's say, 4153, 4150. And when it goes off and sends me an email, I want to go and say, am I getting a reversal signal on the index itself? So, Steve, what I know you weren't going to be making a pick for today, but you are mentioning a couple of stocks, Sky
and AOSL. I like Sky. It's been in a nice uptrend for a while. It's broken a long-term downtrend line.
Okay.
We're holding above it. We're pulling back very modestly, despite the market weakness. I think it's showing relative strength.
Okay.
So as soon as I feel the market is viable, this is something I'll probably buy.
Okay. I like this one also. Darn it. Hold on a second. I like this one also, Steve. Trying to get my drawing tools up here. I like it for a couple of different reasons. One is look at the volume. As this is pulling back, that volume is just almost shrinking down to nothing.
To nothing. I love that.
Okay. We are above the 50.
Mm-hmm.
And so that could, in fact, rebound and jump really strongly from there. And it's holding up a lot better than the rest of the index. And then the next one is
AOSL, almost a similar chart.
Yeah. And I want to point out to everybody to just be aware of what these picks that both Anil and Steve have provided. They are holding up better than the indexes and are still, at or above their 50-day moving average. And so when we take a look at the indexes here shortly, you'll go, wow. Anyway, what's up with this one?
So almost the same analysis, a nice trend, broken a downtrend line, pulling back very modestly despite the market weakness.
Okay.
Holding relative, showing strength relative to the market, and volume drying up, like you pointed out in the other chart. Volume drying up in this pullback.
Okay.
When the market's ready to resume its uptrend, this will be one of the first things that I'll be in.
Yeah. Now, when just are you going to wait for the market to resume its uptrend, or would you be tempted to nibble on this?
It depends. It just depends. If the market stops going down, I certainly then, if it starts to go flat rather than another leg down,
right,
another day down. If Monday is a flat day, I would consider by the end of the day a trade in this or the other one, provided they show me some evidence of buyers coming in.
I got it.
At this point, I don't see buyers coming in.
Exactly.
Possibly a little bit today, in this price action today because of the tail, but it's not a clear, with the low volume, it's not a clear.
Yeah.
Clear
I mean, it looks like it's trying to respect the 20-day line right there.
Right.
So just be aware of that. Good pick. I like both of them. This one and the other one, I think they do not have. No, this one does have. No, it does not have.
I think monthly options only.
Yeah, monthly options only. So, okay, cool. So let's jump over to the indexes themselves. And here's what's going on with the indexes. Can anybody spell ugly? No. Actually, what we're having is, and one of the things in working with, and I got to give Floyd Dameron, the Anchorage, Alaska IBD organizer, in chatting through a couple of things with him, he helped me understand a little bit about how to better time the markets. And one of the things is if you are utilizing a momentum indicator on a weekly basis, as long as that momentum indicator is heading down and hasn't started to reverse, favor trades to the downside, or be really quick about jumping into a trade to the upside, because you may get as we see here, a daily reversal, which could put you into a tradable trade. Be quick to take profits as you approach known levels of past resistance or dynamic resistance, which in this case was the 50-day moving average right there. So what am I looking at here? Market forecast and TSI momentum indicators on the weekly chart still heading down. Price action finding support in this support range here, designated by the darker gray area. We know that buyers came in those areas, and so we could project and say, okay, where are we going at from here? A great way to do that is just to lay on a Fibonacci. If we get the Fibonacci up here. The fib, let's just do a real quick fib from here. I'm just going to keep this to a simple fib, not a fib extension. Just go back up to the highs here. And as you can see, the price action have actually retraced, broken through the 618 retracement, and is approaching in this case, this is the 78% retracement. What we may get is this gives us a projection of what could happen next. And we look here, the 1272 provides a downside target. Look to your left. What does it correspond to? Past levels of support where it broke out from before. What about the 1618? Same. Right at a strong level of past support. So that gives me some ideas on targets to the downside if we continue to drop. And like I said, that's just the simple, straightforward. I won't do the fib extensions. And so, are you, Mark asked a question, what are parameters of VIN, same as VIX? Are you talking about the NASDAQ's VXN, Mark? Yeah. So, yeah, you're going to need, here, let me just take a real quick look. I'll jump over there really quick to answer this question and bump right back out to it. Yeah, it looks as if, and this is, I just want to make sure I know what this is. This is near-term VIX. Okay. Yeah, I mean, just go in here and look at the weekly chart. That's where you're going to make your determination. It looks like it could get up a little bit higher, somewhere about 35-ish. So, okay, Russell, or the NASDAQ, QQQ. Now, the QQQ has been taking an absolutely fantastic beating. We do not have a reversal candlestick on the daily chart, similar to the same thing as going on with the spiders, the S&P. Again, we are seeing a push down continuously with the market forecast. A positive note here is the market forecast looks like it's entering the lower reversal zone and gives us a 3-line cluster, which corresponds with the rule is when you get a 3-line or a 2-line cluster in this lower reversal level, we are normally looking at 1 to 4 trading periods before, and we should see a reversal. A couple of caveats on that is, one, the 1 to 4 periods can still take the price lower, and so we'll still be looking for a reversal signal, and so just be aware of that. TSI also pushing down. The really great information about this is if we do drop down, I really like that 320 to 317 level, because it corresponds to past levels of support that we see over here over to the left. As price actions do push down, we know that several weeks, 3-4 weeks, oftentimes when it gets down to lower levels, it will reverse and we will get a really nice run. Now, are we going to get a run like we did from the COVID bear market? I don't know. We shall see. But again, we are approaching a level of past support, and we'll see if we get a bounce up from there. Last but not least, the Russell. In reality, the Russell has held up fairly well considering. Okay, it is basically, I am surprised it hasn't sold off more. Inflation typically is not good for small caps. Neither is raising interest rates, which those things are coming. And so at the same time, all the moving averages are stacked to the downside. So this could fall and fall very, very quickly. Would not surprise me to see it, in fact, fall back down and retest the 190 area. On the weekly chart, yeah, we had TSI start to turn up, market forecast start to turn up. However, where did price action stop? Price action stopped right at in this case, it's the 8-period moving average, which corresponds really closely to the 34, as we see here. It basically, we are stacked below the moving averages, below the 200, below the 100, and all the rest of the way down. That lends itself to we should potentially get more downside. What are your thoughts, Anil and Steve?
I'm a little bit more bearish than you sound. I'm not exactly sure your stance, but I am negative right now. But I also believe strongly, mainly from a Wyckoff perspective, and because the volume is drying up, that what we're doing is testing the lows of I think February 4th, whatever the all-time low is, or not the all-time low, but the recent low.
Right.
I think we're testing that, and because the volume is low, I suspect it's going to be a successful test, which will then start a very strong bullish move in the market.
Okay.
There's certainly a chance it'll go lower, but I believe it will not, because the volume is not coming into the market at this point. So I think it's a test, and we'll get a bounce.
Okay.
Not to say we couldn't trade lower, but I think it's unlikely.
And so, well, now when you say trade lower, what exactly? I mean,
trading below the low of the February 4th.
Right here.
Yeah.
No, right here. Where's February 4th?
Whatever
right
the
there.
low. No, that is not.
Yeah, that is right there.
Wherever your second arrow is. Yeah.
This one here.
Yeah.
Okay, that's the low of the 28th of January.
Okay.
So, yeah, I mean, that's where we would expect it to stop, and isn't it interesting? That's a 50% retracement, and that's the move from this high to this low back to this high. However, if it drops that hard
on volume,
that could set us up for a fall. But I find it very interesting is 100% symmetric move takes us down to this purplish line. Look to your left. That lines up perfectly with past levels of support. Yeah. What do you think, Anil?
No, right now I don't actually have an opinion. I'm just watching, and I'm learning with your Fibonacci extensions.
Okay. And so let me get that one out of the way. So yeah, one of the things that I wrote down as a thought to take into this weekend as you're doing your analysis, this is for everybody, is just keep this in mind. Technicals help you separate opinion from fact. And so just learn to, and sometimes I know I look at the technicals and my opinion is very strong, thinking that, okay, this economy is going to tank. I'm thinking, who can we blame? Blah, 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 blah. The charts actually provide the facts on what will be, potentially happening. Yeah. And right now, the charts are telling us favor trades to the downside.
Or be neutral,
Yeah, exactly.
Be uninvolved with the market,
And so,
one other comment I'd like to make, mainly in response to your comment on interest rates. In the past, when we've had Fed tightening by raising rates, they've actually turned out to be very bullish events.
I agree.
Looking out a year and a half later,
Once they start actually putting the rate hikes in place, we'll see. I mean, the three of us can still remember probably, if you bought a house back in the, 1980s, remember paying 16, 17, 18% for interest rate on a house. So, hey, just to everybody else, if you live through that, just raise your hand.
Yeah, I remember that.
1,000 hands.
Yeah, double hands. So, wow. Yeah, and so that was quite painful. We'll just see. There's a lot of things working and a lot of inertia out there. Let's go ahead and finish off strong with my pick for the week. My pick for the week, again, is one of those stocks similarly to what Stephen and Neil had to offer, and it's CMC. I really like this, the commercial metals. It does have earnings coming up on the 17th of March. We may be looking towards a breakout area here. I wouldn't buy it right where it's at, simply because its personality is doing halfback pull, at least halfbacks into the midsection of the previous week. And I'll show you what I'm talking about. This is tip number 2 for the day, is when you start a move, oftentimes you will get a halfback or a pullback into the midsection of the previous week's price action. Does that happen it doesn't happen every time, but it does happen all the time. And you can look back at the history of a chart such as CMC. Has it demonstrated doing that before? And it sure has, both going up and coming down. And it works in the same way. If we get a big red candle to the downside, you can measure up to about the middle third. That could give you a potential trade to the downside. Flip that over. Now that we're having some big green candles to the upside on this, my volume, not that happy about, but I'm looking for a pullback into the midsection of today's candlestick, the body. And where does that put me? About the 36.17 level, about the 36.17 level, or maybe a little bit lower. So it's 36.10. Now, of course, if you are an autopilot trader, you were in down here and very happy. But again, if I was wanting to add to the position, that's exactly where I would want to add and expect it to move on up from there. So there's my choice, guys. Thoughts?
Looks good. I like this basic area. All the resource stocks are doing well. The miners and the companies that support mining, they're doing very well. Yeah. And gold is in a little bit of an up move, but I don't know if it's real or not.
So,
yes, it looks good on my system. Actually, had a buy signal on February the 9th, and it's still holding on.
February the 9th, which was, let me go right there. So cool. Yeah, we've actually traded and we took off profits. It came back, we bought some more, and it took off. And so, yeah, I'm really liking this. Right now, we're riding it up. It is on I think a 7% trailing stop on everything. So, okay, folks, well, that finishes us up for the day. I just want to remind you that all the materials we do present are for training purposes. Traders should always pay for trade any new method prior to the risk of their own personal capital. Hey, do you struggle with this? Fear of not knowing where and how to exit a position. That is, Mark Minervini says that's one of the biggest challenges for traders. They have mastered the concept of how to get into a position and where to get into position, but they're like deer in the headlights for where to get out. We've solved that with the AutoPilot Trading. And basically, we provide typically top 5 stocks, 5 of them, and 2 leveraged ETFs every week. And there's the email address or the website. If you want to check it out, we encourage you to take a 3-month test drive, test flight, tell us what you think about it. And I'll leave this up momentarily so that you can go ahead and take a QR code, take you directly to the site. And so that does it for today. And again, 2022, a year of patience and persistence. Stephen and Neil, thank you guys very much.
You're welcome. It's my pleasure.
Yeah.
And I think we got some good choices. And again, I think each one of us has encouraged people, be patient and wait for your setups. So aloha. God bless everybody.
Thank you. See you next week.
Thank you.